Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. As we can see, all the markets here have been strong over the past several days. And as we look at the corn market here, we can see we've blown through our minimum price objective of 422.5. Markets made it all the way up to 433.5 and is slightly above that price level right now. So currently what we're looking for ahead of the WASDE report as well as the CONAB report due at the end of this week, 450 looks to be a critical zone for this corn contract. And if it's able to get through 450 in a very strong fashion, then the next area of resistance that we're looking at is at about 471.25. 450 looks to be very significant for this contract. And so at these levels here, it's important to make sure that we're locking in or pricing in some of our inventory at this time. Since this corn contract has moved through previous point of control top end thresholds, we've captured additional data to give us a better view of where we're looking at now that we're at a higher number for where this contract is trading. Currently, point of control sits at 433.75. First standard deviation above that level sits at 475.5 to 475.75. You'll notice right now that we're very close to that point of control number. And so as we sit around this area, as we make a move potentially up to 450, on its way back down through the point of control of 432.75 would potentially be a form of confirmation that the top might be in and the market looks to make its way back down. In any case, what we're looking at right now in terms of market cycles is for the corn contract to continue to behave in a strong fashion, perhaps through the end of the month, and not looking for a top to occur until closer to the 4th of July holiday weekend. The December corn contract is already very close to that 450 number, approaching 446 to 447 for the 180-degree mark. Above that, we're looking at being close to 450, but his key point of resistance sits at the 90-degree mark of 468.75 to 468.5. Once we get to this number, it's going to be very important that we watch how this market responds to this level. And at this point, as the market continues to migrate on its way up, it's perhaps prudent to continue to have stops below the market at each of these key demarcation points so that we do not give up a very good profit on the way up. In the past, we've discussed how important it is to watch how the market responds when it is near the key point of control. Here we have the point of control sitting at 419.75. That would be right along here. The market on its first attempt actually found a bit of resistance here. The next day it had an outside reversal day where it actually traded below the low but came back up again. The very next trading day, the market gaps at this point of control level. And then we see this vacuum price action that we've talked about in the past, where the market can often move very quickly from point of control to the next key zone levels above it. Well, 453.75 is the next key zone, and this is where we see the market approaching as we saw two very big spikes make its way up through that point of control after it was penetrated. So we'll continue to monitor these levels, but the market right now is very strong, so we're not going to fight the trend. Interestingly enough, the move in soybean has not been as strong on the chart as the move that we've seen in corn. The market broke out of its consolidation that we had talked about previously, and after breaking out of this consolidation, we saw a nice move or explosion up into volatility-based resistance, at which point it actually consolidated a bit here again, and now we find ourselves very close to a potential point of resistance. Now, as the market has made its move here, if we measure from this actual low up into this consolidation zone, if we were to take that exact same measurement, we're looking at a mirror move from the near-term low from that consolidation that may terminate somewhere in the neighborhood of 1229 to 1230. Again, we don't want to fight the trend. More of what we want to do is to trail behind the market. But cycles would point to a potential top occurring sometime at the end of this week or early next week for soybean, unlike corn that we're looking to continue to move up through the end of the month. If soybeans able to top over the next couple days, then we do think a very nice decline into the end of the month is probable at that point. It's going to be important to watch what the report at the end of this week reveals. But beyond that, we will again simply follow the trend and allow the market to give us clear insight as to what it wants to do. Here we have a few natural timing angles. And again, that 1230 to 1250 number is going to be very important for this contract on its way up, if it's even able to get up into this area or into this zone. In hindsight, we can see on the November contract that he made a very nice pullback coming off of 270 degrees after breaking above 180 degrees that pulled back into the 90-degree mark. Upon doing that and regaining the 180 mark, the market then was predisposed to making or completing a cycle run up to 360 at a minimum, which sits at 1120. Now the market is testing the 90-degree mark, and in all likelihood, what we would be looking for right now would be a test of that 180-degree mark. So depending on whether or not it's able to get above 1190 is going to be very key for this market. Above 1190, we could see a potential rotation up to 360 degrees. But if it fails at about 270 and then comes back down, or fails at this 180-degree mark near 1190, then we're predisposed to believing that the market has in fact topped, especially since we can see that he is now overbought. Now, mind you, in the past he's been overbought, but the trend has turned up, but the market has been very extended right now. If we don't get the kind of news that the managed money is looking for, then at this point it's going to be prudent for them to actually start taking some profits or taking money off the table, at which point we can see a very violent move right back down in the same fashion that we've seen it go up. November bean is currently testing the top end of the point of control, with zone 2 high being 1149 and current prices being near 1150. The next point above that would be the life of contract high, which sits somewhere in the neighborhood of 1255. So above 1150, we could see a potential run that tries to test the life of contract high. But between here and there, we can see several areas of potential resistance that could actually potentially plague this contract also. Again, this end of the week, ConAb and WASDE report are going to be very key, because historically they have played a role in creating a potential pivot for the soybean market. Wheat futures has truly been the surprise to everyone. And as we can see, after the market made a very solid low near our levels down below, we saw the market really rocket all the way back up to make new highs as it's traded up through previous resistance. Once it was able to break that 487 mark that we talked about before, that was key resistance, the market broke through and found great strength on the way up. Part of what has also exacerbated the move that we've seen is because managed money was on the wrong side of the trade, and so in a frenzy to cover themselves, we've seen short covering really add to the strength of the move on the way up. Currently, we're looking at about 360 degrees above the market for key resistance. At the 90-degree mark, we're sitting at about 509.5, and then just above that at 532 is now the key point that we're looking at for potential resistance here, which is just shy of volatility-based resistance overhead. The narrative for this contract has shifted a bit, as we have seen bad weather in the growing areas in the Midwest affecting some of the crops. So as this has occurred, we've kind of seen the perfect storm come in and really help to stabilize wheat prices. As we can see here, and as previously discussed, the area of 482 to 487 was the key area for resistance. Upon breaking that area, the market really ran all the way up to the next key zone at 514.5. Today we're trading at about 520.25. But as we can see right now, key resistance overhead sits at about 530, and this is really the point that we would be looking at right now for key resistance. In closing, we'll have a look at the crude oil contract. If you recall, some time ago, we talked about how a potential wave 5 top may have occurred across this area here. The market consolidated for about 6 days, and then he broke through and then moved higher. We then thought another potential top may occur here, and what we're noticing here is a replica of that fractal, meaning that the same pattern that occurred before is happening again. When this happens, we'll see a repeat of the move on the way back up or back through, which would explain potentially now that the market is poised to make a move up to about $53 at a minimum. So we have found great strength with the crude oil contract. So the next key area that we're looking for is in the range of 53 to about 54. Thank you for joining us in our weekly market review. Look forward to touching base with you again next week.